Hey guys, we're back for another weekly options update, and what a difference a couple of days makes in the market, right? Not out of the woods yet, but definitely in much better shape than I was just 1 week ago. And we'll go over some of it, did some more rolls. We'll talk about what positions I'm in, what am I concerned about going into the next month. And yeah, let's just get into it. For those that are new, I go over all my open, closes, losses, wins, all that stuff from the previous Wednesday to the close of business on Tuesday. So that's 5 days of trades, barring any holidays or things like that. So it's 5 days of trades, 5 days of wins, losses, all the trades, right? So let's get into it. Now you remember, this was important because we rolled that last week. On Tuesday, we rolled that TQQQ out to 57.50 from 57.50. Right, we took a $1,426 loss on that last week. That'll come into play here shortly, and we'll just keep that in mind. But Wednesday, I closed out two of my Dutch brothers. I wanted to get an opportunity to get back in, but Dutch Brothers has been running. So I closed out one for 75 cents and closed out the other for 30 cents for $65 and $60 profit in 3 to 4 weeks on both of those. Lemonade, I sold the lemonade call on January 26th. I sold the 50 strike, collected $1. Very next day I closed it out for 50 cents, so made $50 in a day on that one. Fubo, that is one that I'm trying to work through. I was assigned at I forget what I was assigned at. I think I was assigned at $19 or $20 or something like that. Got assigned here 100 shares at $11. So that contract is 100% profit basically. So $52 in 8 days there. Sold a put on Fubo that was on 125 for an $8 strike. Got $16 for that one. That expired worthless on Friday, so $15.38 there in 3 days. Stone is another stock that I own. Had a covered call, sold a covered call on that. I had an 18 strike, 50 cents. I closed it out for 25, so I made $25 in a week there. Stone, another put. I'm trying to lower my cost basis in this one as well. So it was a 13 strike, expired worthless, so profited $25 there in 4 days. Fubo, another put I sold on the 28th. Sold the 9 strike for 38 cents, bought it back for 12. 3 days later, so made $25 on that one. Palantir, another one that I'm trying to average down on. Had a $10 strike and a $9 strike. Bought those back for 14 and 8 cents respectively. So made about $48, $50, $49 in a week off of Palantir puts. Added another Stone put, trying to get it trying to get assigned here at a 13 strike. Sold it for 30, bought it back for 6 cents. So made $22 there in 3 days. So I'm just trying to cycle money off of these. I got Palantir, I got Stone, I got Fubo, I have Lemonade and Vizio. Yeah, I think those are the 5. I am not doing anything with Vizio just yet. I do have a put expiring on Vizio here in the next couple weeks. Now remember we did that, lost 14.2632 on that TQQ 57.50 strike. We rolled it down to 52.50 and 40. So we doubled down. So we went from 2 contracts at 57.50 to 2 at 52.50 and 2 at 40. I went ahead and closed both of those down. Okay, with these couple of days up that we had, I closed the 52.50s for $1.93, and I closed the 40s for $1.24 for a profit of about $1,160. Now that's almost covering the roll there, but what I wanted to do was just capture that profit while it was there, and we did roll the difference into more TQQ contracts down below, and we'll get to that here in a second. Did a bunch of ARKK stuff. Okay, we closed out ARKK, my 69.22 for $1.58, profited $30 there in 22 days. I had a roll from 80 to 75, 85 to 75. Actually, it was actually started at 95, I believe, back in December. So now we're back down to 75. ARKK ran. We took profit here, $4.38, closed out both of those. Profit of $542.80 there in 11 days. But we did make up the difference because there was, is that up here? Yeah, you can see we lost $5.59 on that last roll, made $5.42 of it back, and then we'll look and see what we opened to cover the difference. So now let's look at all the openings. So those were all the closings. Let's take a look at all the openings and let's sort this. So from 126, covered call from Lemonade. I already talked about that. That was a one-day trade. Fubo put, that was a 3-day trade. We already talked about closing that one. And then Stone put, we already talked about closing that one. So now we go to Fubo. Since I was assigned those $11 shares, now my cost basis is right around $15.36, right around there off the top of my head, I'm thinking. So I sold 2 calls out to March 18th, both covered calls, one for 15 and one for 16. So that would give you an average of $15.50. Collected $33 and $28 respectively. Stone covered call. I sold this one at $18. With all the puts that I've been collecting, that's about where my cost basis is. It's not really there, but I'd be happy to even let go of this at a loss. So I sold that 18 and collected $80 there. And then Lemonade, I do own 100 shares of Lemonade at $48.75. I do have I have 3 puts on them, 2 at 30 and 1 at 25. And I do own 100 shares. So I sold $50 covered call, collected $65 on that one. We'll see what happens with the puts. I may just keep selling puts and, hopefully calls ain't bad on Lemonade, to be honest with you. And now TQQQ, you guys were wondering where the difference came from. There it is. I sold 2 47.50s out to March 18th. So basically I went from 52.50 and 40 to 47.50, and I'm okay there. I didn't want to have 4 contracts anymore. So now I only have 2 at 47.50 out to March 18th, collected $257 for each of those. Now the ARKK, closed out those ARKKs, but I went to 5 contracts in total. Okay, I had 3, but I had a couple of those at 75 strikes. So I really wanted to get safer, lock in that profit from those 75s. Like I said, where'd that go? Let's sort that again real quick. Locked in those profits of the ARKKs, 542, so 572. Still had some money out there on the table, so we are down to 3 contracts at 64.22 strike for $189 a piece, and then 2 contracts at 69.22 at $306 a piece. I'm comfortable there. I think ARKK, it could get challenged again, no doubt. Like I said, we're not out of the woods yet. I'm pretty heavy in it, 5 contracts, but we're getting down to where I'm comfortable in ARKK, right? I mean, this thing started out at 90 something. So this shows kind of the importance of running light having some room to manage these positions, either expand them and either bring them down and follow that stock down, right? Because we followed it from 95 all the way down to now I got a 69 strike and a 64 strike. And we're in a lot better shape there, even though we have 5 contracts. And a lot of times, when you roll down and out in time, it really doesn't affect your margin impact very much. If you're not adding contracts, it'll actually reduce your margin impact by lowering the strike and going out in time. But when you do like me and you add contracts, it does add up a little bit of your margin impact, and that's the reason why it's important to keep some room there for these times. Fubo, I sold another put out to next week. $10 strike, collected $31 there. And then RYLD, I sold 5 contracts at a 22 strike, collected 30 cents a piece, so $150 for those 5 contracts. If they get to $22, I'm happy buying them. So that's it. That's it for the openings. Now let's take a quick look at premium cooking. And like I said, it's not out of the woods yet, right? But definitely those 2 up days, man, they made the biggest difference in the world. Was it 3? Might have been 3 days. So week ending February 1st, we closed out 15 positions, opened 12, realized profits of $2,123.63, put on $2,171.22 in new premium. So total premium cooking right now, $5,070.75. Maintenance margin of $26,200. 22% buying power usage. That is maintenance margin divided by net lick. Cash balance $111,274. The only reason why that's not higher is because we were assigned some those shares in Fubo, right? And then that'll take away from your cash balance when you buy shares. Obviously. Net liquidation, big jump from $110,900 to $118,700. Return on maintenance margin, that is 7.72%, and that's the profit realized divided by last week's maintenance margin. Return on net lick is this week's profit realized divided by the net liquidation of last week. So 1.91% there. Don't pay attention to the notional because I have that one thing on that's a spread, and it really isn't that high. Okay, now let's take a look at how we did against the market year to date so far. So if we look, started the year off roughly with a net lick of 123,100 right there. I say roughly because I'm not going from January 1st. There might be a day in December there because of the way I'm doing these weeks. But 123,100 final value, net liquidation is 118,700 for a 3.57% decrease. Okay. Not too bad. Because if you remember last week we were at 9.9%. So what a big turnaround in 1 week, in 5 trading days, right? And we compare it to the S&P year to date. The S&P's down 5.2, NASDAQ's down 9.4, and the Russell's down 9.7. So finally got a little cushion on the indexes, and I couldn't be happier. So like I said, not out of the woods yet. I got some positions to manage. We look at the quick view here. TNA is my next thing I have to look at managing. I have one 65 strike that expires on the 18th. That's in the money. My Camping World, that's climbing. That's in the money. Expires on the 18th. I may not have to manage that one at all. Either one, really. That Vizio one, I may, I don't know if I'll roll that or take possession. We'll see. And then ARKGs I'm going to have to really pay attention to soon, because those are in the money. I have a 53.62 there and a 50.62 that's close to in the money as well. And then I have the MSOS, which is the U.S. cannabis ETFs. I don't know. I'll make that decision later on. I'm gonna let those just bake and sit there. So overall, not displeased with the week. Still, again, there's possibilities of downside, right? I mean, you can't, just like you can't have multiple days of red. You can't have multiple days of green all in a row, right? So something's got to give, and we'll just have to play it by ear and manage as needed. And we're sitting at 22% buying power usage, and so we have plenty of room to manage. So that's key. All right, guys, that's all I got. You guys have a great week. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.